Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have Robert Helms. I've seen Robert speak at many real estate conferences and have listened to his show over the years, so it's an honor to have him on the podcast. Robert is a professional real estate investor with investment and development experience in 9 states and 6 countries. Robert's investment and development companies, past and current projects, have valued over $800 million. He is the co-author of Equity Happens, Building Lifelong Wealth with Real Estate, and the founder and host of the nationally syndicated radio show, The Real Estate Guys, now in its 28th year of broadcast and heard in more than 190 countries. That's incredible. Thanks for joining us, Robert. Can you start by telling the listeners a little bit more about yourself and what you do?
Well, certainly, and it's a pleasure to be on the program, Gary. Enjoy the work that you do. Obviously, we've been on the radio for quite a long time talking about real estate. I spent 18 years selling real estate for a living, and most of that time I would be accumulating it for myself. So I fashioned myself a collector of real estate. I've been investing in 5 different decades.
It's interesting you say collector, because I think a lot of people, sell within, they get their returns in a couple of years, and then they look to sell the property. And I say more so the last maybe 7 years, but typically what's your whole time on a deal?
Yeah, so my favorite time is forever. I'm a cash throw-off guy. Number one rule in my personal investment philosophy, never sell. It doesn't mean I don't sell. It means that I approach any kind of an opportunity to sell something as a way to buy something else, hopefully something bigger and better through a 1031 exchange, or sometimes not, just in order to reposition. But I think, there's nothing wrong with the idea that we can preserve part of our return by selling. I know a lot of guys, their plan is every 5 or 6 years they sell because then they capture that equity. And I completely get that. I think it is lazy landlord syndrome when you just own a property and let the tenants pay it off. I mean, nothing wrong with a free and clear property, but there's better uses of the funds. So I like to revisit the property's financing from time to time. I might keep a property, but redo the financing. But it's really a mentality more than anything that I'm not in it to sell it. I won't put anything on my portfolio that I wouldn't be happy to leave to my grandkids.
I love it. It's a great approach. It's more gardening versus hunting. And I think as investors are in real estate longer, then they start to realize their biggest mistakes typically is the deals that they have sold and not held.
Yeah, it's what we call non-buyer's remorse. Buyer's remorse, you buy something, you feel bad about it. But non-buyer's remorse is when you could have held on and you sold it instead. And almost every property, if we look back 5, 10, 20 or longer, in my case, years, it's like, man, I should have kept that. I should have kept it. And I think there is an opportunity to take advantage of markets when it makes sense. I did sell a property last year that I hadn't planned to, but my agent said, first thing out of her mouth, I know you don't want to sell, but we have an offer that you just have to look at. And it turned out it was an astronomical offer for the property, I thought. And it turns out that the buyer was my next door neighbor who was trying to preserve their view. This is a lot that I own that I hadn't built on, and the neighbor was hoping I never will build on. When I bought the property, it was all vacant lots. And so this particular owner was willing to pay a lot more for the property. I said, okay, they're probably the right steward of the property anyway. It's not making any money from a cash flow point of view. Let's deploy the asset somewhere else.
Sounds like a great deal. You got to sell at that point.
Well, and you're often in real estate looking for that don't wanter, someone who wants to get rich. One of the best things about real estate is that it's not like the stock market. There's nothing I can do to influence a share of Apple stock, nor can I sell mine for a higher price just because I'm a good guy. But in real estate, the motivation of the seller feeds into it. And we find opportunity, you know this, you find deals where there's nobody else looking. Some of the best deals I've ever been involved with, I was the only person shown the deal. And that's because I was careful to build up a relationship with people rather than just think about a transaction. And that's taking that longer term approach.
Absolutely. And I think that benefits those that focus only on a few markets than certainly targeting markets all over the country. You have those developments. You can see opportunity much faster than someone else that's not in that market on a regular basis.
Yeah, and I will say this about the number of markets. I believe you can only know a half a dozen markets well enough to make a good informed investment decision. In my bio, you probably noticed I own more than that. That's just because I've been at it a long time. I remember I had an appraisal student. I taught appraisal at the college level for 4 years, and I had a student come up and she said, I'll have you know, I have been researching 18 different real estate markets. And I said, you're wasting your time. And she looked at me like that wasn't the answer she was expecting. But I'm like, 18's too many. Pick two and compare them to each other, decide on one, invest there, and then maybe add a third, right? This is a slow and steady wins the race kind of business.
Yeah, I think that's another big mistake a lot of newbie real estate investors make. Not only different asset classes, but too many markets. And you can't get good that way. You've got to be a mile deep and 2 inches wide.
Totally agree. Get rich in a niche, right? Be known for something. And it isn't that you can't be interested in other investments. One of my favorite ways to get exposure to both markets and property types that I don't have exposure to is to passively invest, to put money in somebody else's deal who's done the research, has the reputation, knows the market, has all the great relationships, rather than me try to build that up over 20 years. I find a guy like you that's done that and say, man, I could just skate right in on this. So it is a way that you can expand what you're doing and not face that shiny penny syndrome. If you're not clear about what you're trying to derive out of real estate, then any deal seems like a good deal. So we spent a lot of time coaching people on personal investment philosophy, the things that make you different from every other real estate investor.
So you've probably seen it all over your real estate career. Talk about what you're currently seeing in the marketplace and where you think it's headed.
So I figured out that, I kind of hail from Silicon Valley originally and surrounded by tech, but I don't think we're ever going to have a technology that eliminates the need for human beings to sleep under a roof. So I believe that real estate has and always will be a great investment if you buy it in the right places. You can't just throw a dart at a map and hit a spot. You got to be a little strategic about it. And I can certainly share a couple of ideas there. But I think long term, we are underbuilt as a nation, right? Here in the US, we have less homes than we need. Now, depending on who you listen to, that might be 2 million, it might be 7 million, but there's a number that is, where we don't have enough room at the end. And so going forward, long term, plenty of opportunity. Short term, we've had a little bit of a challenge. One, interest rates have been so high that we've had the lock-in effect I'm sure you've talked about, where folks don't want to sell their house, not because of the house, but because of the 3.5% loan. They don't want to double their payment. But also, we've also got people that they just are uncertain, and a confused mind won't act. We're not sure where interest rates are going. We're not sure what the Fed's going to do. It's an election year. We don't even know who's going to be president. That's a hard time to invest. I think once we get through that and some of this excess inventory, multifamily is a little overbuilt temporarily in a few markets. And that's just because a lot of folks saw the underbuilt went after it, and they all came out at once, and there is no cohesive place that developers can go to say, here, are you putting a place? Are you doing 200 units there? Are you do right? So that all these units came up, but absorption wise, that's all gone in 18 months. And then we're back to needing more housing. So if you're strategic about it, I think that you can outperform almost any other investment in real estate.
I fully agree. I fully agree. You mentioned investing outside the U.S. I know you've invested in 6 different countries. I don't think I've had someone come on the podcast and really talk about that, but talk about some of the benefits for investing outside the U.S.
So often when I'm speaking in front of a crowd, I love to do this. I'll raise my hand and say, who thinks it's risky to invest outside of the United States? And there's a whole bunch of hands. And then I'll say, who thinks it's risky to have all of their investment capital tied to one nation's economy and currency? And then there's a whole different group of hands, and sometimes some of the same hands. And so diversity in general, I think, is a recipe for mediocrity. If I just put a little here, a little there, a little bit there, a little stocks, a little bonds, a little real estate, I'm not going to do very well overall, because some will do well, some won't, and most will just have an average return. We can do better than that in real estate. But there are some reasons to consider going outside of the US. And it does have to do with diversity, but also non-correlated assets. So when everything in your portfolio moves the same way when something happens, then you have correlated assets. But if you can find places where there are non-correlated assets, that's a way to diversify. And then also, I think there's just a lot of budding opportunity of these maybe third world places that aren't yet in favor. One of the markets we're in is extremely, extremely strong now, but it wasn't that strong 19 years ago when we got there. So we were looking for where the puck was going. And for those first couple of years, people were like, what the heck are you doing there? And now people are like, wow, you guys were brilliant. So I don't think there's a lot of reason for the average person to say, I've got to invest something outside of the US. But as soon as you're thinking about diversity from that point of view, and for a lot of people have places in the world you want to go, see, spend time in, there can be a personal use component, what we call lifestyle investing, by owning something that you'd love to go visit and having it rented out when you're not there.
Yeah, I think, more and more people are talking about lifestyle investment than ever before. Partly is because where I'm, my age, my age group, and the groups that I'm involved in, but it's become, the world has just shrunk so much through Instagram, through social media. So what are some of your favorite markets outside the US, and why?
So the first market I went to out of the U.S. Was Mexico, specifically Cabo San Lucas. At the time, more than 35% of all the visitors to Cabo San Lucas weren't just from California, but from Southern California. So it's a really proven market there. We had been there a few times. And when Las Vegas, Nevada went up 52.6% in 1 year in the early 2000s, I wasn't sure what, but I knew that couldn't sustain. So we decided to put a little foot offshore, if you will. And that was a great experience. What I discovered after investing in lots of different places is that Mexico is the opposite of a tax haven. They have a more burdensome tax regime than even the United States, and it's difficult to do business without solid relationships there. So we've expanded. I've got property in Australia, and that's a place that has turned out to be really great for us, not because, oh my gosh, I go there a lot or any of that. I've only been to Australia a handful of times, but I'll tell you, during COVID, they had a pretty restrictive lockdown there, but none of my tenants moved at all, and it was awesome. Right? Because the two most expensive things in buy and hold real estate, turnover and vacancy. So if you can eliminate that and you buy in the right place, that can be awesome. Our number one market outside of the U.S. is the country of Belize, which is a small country. Less than 500,000 people live there. But it's beautiful. It's postcard beautiful. It's got that white sand and that blue water, and the water's always 80 degrees. And sometimes that throws people off. You get too enamored of that personal use component, but you do still have to look at the numbers and what makes sense. And the biggest thing when you go outside of the country that you're familiar with is understanding the basis of law and how business is conducted, because it's maybe not what you're used to. Even though some of the same nationally and internationally recognized real estate chains are there, it's still, real estate is done differently everywhere. So just be patient. go through the learning curve. It takes a little bit of time. I had been to Belize for 2 years on several trips before I bought my first property there. So it's not a hurry. But it is that merging of lifestyle. The typical Belize buyer is someone from the US or Canada, comes down on vacation, falls in love with the place, and says, honey, we should get a condo here. And we'll come a couple times a year and we'll rent it out the rest of the time. So that's your typical lifestyle use. But is there a way to support that type of a use and what else is going on in the market? It's also a great agricultural market. They got tons of land and it's really fertile. So there's different investment types in every market you go in. And so it's important not to mismatch a market with a strategy. If your strategy is I need cash flow from day one, then a development project in Belize is probably not a good match for you. But if there's places you like to travel, it does all kinds of stuff, right? It lets you go somewhere where you can get that same time next year and get to know folks and all that. But also where part of your reward, part of your ROI is the time you spend there. I have some industrial property I don't really spend much time at, but my vacation property, right? I pick it because it's a place I'd like to go, which is different than saying I'm picking it because everyone's going there. When those two things come together, like they have for us in Belize, it's pretty exciting. But it does take a whole new level of understanding and education. So be patient with yourself as you study other markets.
And you could also travel there and have a tax write-off too, which is fantastic.
Yes, consult your tax professional, but that is definitely one of the benefits, and it's legitimate. If you're going twice a year, say, to inspect your property, make sure when you're there, you're doing the things that an owner would be doing. If you have somebody else renting out the property, you're going to want to meet with those people. If you have repairs and things that have to be done, take pictures, right? To have a good time, but it is one of your responsibilities to make sure that you're doing the things that an owner would prudently do.
Absolutely. Where do you think the biggest opportunity lies in real estate? Maybe as far as country, type of asset. I know you mentioned multifamily, earlier, but I mean, is that you think the biggest opportunity going forward, or what do you think?
I think there's a strong opportunity, not in specifically multifamily, because that's such a wide category, but in workforce housing and places, because that's really where we feel the undersupply. It's not at the high end. It's not even in the C class, super low end, but it's somewhere there in the middle. So I think that's an opportunity. Back in the day, my least favorite investment was land. I think we were talking about this at lunch. And today it's one of my favorites because from the time that a property is just raw dirt until it's a completed finished building with tenants, there's a lot of different points in there where you can make money. And so the point between raw dirt and entitled land that's partially developed, that can be a short period of time, but pretty lucrative. But at the same time, most folks who are busy with the rest of their lives have no interest in doing that. They'd rather buy a little house and just have it cash flow. Nothing wrong with that. So I see there's always opportunity when you are providing clean, safe, affordable housing. Hard to go wrong there. That's probably not the highest ROI, but when you look at the risk-adjusted return, it's a pretty safe place to be.
Yeah, that's my favorite place to be. Like you said, super safe, and you can definitely argue that there is still tremendous return on investment there as well, because a lot of the places what we're buying is, owners have kind of, it's at the end of their cycle, and so there's always an opportunity to kind of refresh that property and really transform it into something the residents can feel proud of, and really make a nice jump in NOI.
Well, when you approach it with a clean set of eyes, right? The person that bought it, they've been there for a while. Sometimes it's like, well, it's working for me and I don't want to spend the money to get the rents up because I'm comfortable and people aren't moving. But you come in with a new perspective and comparison, and there's great opportunity in that. And you can get those multiples. Plus, there's so many ways we make money in real estate. It's not just cash flow, it's long-term appreciation and tax benefits and even amortization. If you are in an apartment building long enough, your tenants start to pay off your mortgage, and that feels pretty good.
Yep. Heck yeah. So what have been one of the one or two biggest factors for your success in real estate over the last 28 years?
Yeah, so I have two. One is mentors, right? Getting around the right people. My dad was an incredible mentor to me. We called him the godfather of real estate. He invested in 8 different decades. I now say 5 different decades, which is Not that I've been investing 50 years, but my first property was, I think, 1985. So I've invested in the 80s, the 90s, the aughts, the teens, and the 20s. So 5 decades. He invested in 8 different decades, and he was a great mentor. But also, Tommy Hopkins taught me how to sell. Jim Rohn taught me how to live. I have all kinds of great mentors speaking into my life. And sometimes you have a just casual mentor relationship. And other times you have a very structured mentor relationship, and it's all good. And two is, I guess, a corollary, but it's just the sooner you understand this is not a numbers business. This is not a transaction business. This is not a meets and bounds and inspection business. You have to know all that stuff. You have to do all this stuff. But at the end of the day, it's a relationship business. And your return on investment in terms of your life force and energy is always rewarded when you do good business with good people. So at my age, I'm tired of suffering fools. So I don't do a deal unless I'm really digging all the people involved. And you get to that level by having those long-term relationships. You have to set out with the end in mind. My dad used to say that you don't have to give natural childbirth to an idea. You can adopt. When someone's doing something, you can figure it out. And then when you build up those relationships, those are the people, your foxhole buddies that you can do deals with. Because let's face it, real estate doesn't always go perfectly. There's challenges. Things go wrong. They don't go according to plan. And so if you're at odds when that happens, it's a very different experience than if you're locking arms and saying, let's go handle this together.
Yeah, that's great advice. I absolutely agree. Mentors, and relationships, that has been probably the two biggest factors in my career as well. So well said. What has been one of your hardest lessons learned in real estate investing over the years?
Yeah, picking the wrong partner. I've done that more than once. They say that experience is the thing that lets you recognize a mistake when you make it again. I had a partner early on that I was listing and selling houses, and he was buying and fixing houses, and he would hire me to help him find a house, and then he'd hire me to sell the house. And we had a great relationship. And he sat down with me after we'd done half a dozen deals, and he goes, I was noticing that some of these deals you made more money listing and selling them than I did. And some of the deals I made more money doing the work. What if we just came together and we did it together, and we actually formed a company, and that was all great. And then things didn't go so well. That was a hard lesson. Had I been a little more careful and strategic and intentional at the beginning, another thing my dad used to say, again, big mentor, he said, the information about the relationship is available at the beginning if you choose to heed it. And when I look back at the couple of bad partnerships I've had, it's like, man, I should have seen that coming. So I would say this, don't just jump into business with somebody. Do a deal, do a transaction, see how that goes. And if it goes well, great. It's like when you invest in a syndication. If I'm a passive investor, I'm not giving you all my money on day one. Let's do one. Let's see how it goes. And if I like the deal, and if I like the communication, if I like you, well, let's do it again and again and again. So I do think that's been a big lesson for me, is just I trust early and maybe too early. And now I'm just measured, right? Ronald Reagan said, trust, but verify.
Yep, that's great advice. I was in a business group years ago, and that was always like one of the key phrases: trust but verify.
Yeah. Jim Rohn used to say, there's only 6 or 8 really nasty people in the world, but you have to be careful because they get around a lot.
Absolutely. Well, Robert, it was a real honor to have you on the podcast. Like I said, I've been listening to you for many years. Love what you do. Where can listeners find out more about you and what you offer?
You can find us at all of your favorite podcast outlets with the Real Estate Guys radio show, or just go to realestateguysradio.com. Gary, it's been great getting a chance to talk, and thank you so much for having me on the show.
Absolutely, Robert. Thank you. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.